Welcome to the series of videos on fundamental valuation of gold and silver miners, looking at their Q4 2021 results. This series will cover a couple dozen of miners, but only a fraction of these miners will be made public on YouTube, and that with a 1 or 2 week delay. For timely updates on all miners, join us at myfinanceteacher.org. Today we're going to talk about Kinross, KGC, which is an interesting example for a couple of reasons. First, it's a new owner of Great Bear. Great Bear has been an amazing exploration success story, so that is a positive development for Kinross. But on the other hand, Kinross does have quite a large amount of reserves in Russia, which at least at the moment is not really a positive factor. We'll have a look at a double version of a valuation for Kinross, with the double valuation including and excluding the reserves in Russia. Our fundamental valuation of gold and silver miners is based on these valuation factors, including the price of gold, silver and copper based on the respective ratios. The model also includes the amount of reserves and resources that the miners have in the ground, including the costs of extracting those reserves and resources in the form of all-in sustaining costs. We subtract the long-term debts as well as taxes, and we look at per share value, taking into account time value of money and the amount of insider shares. So as you see, it's not an exhaustive list of factors that can affect the valuation of a miner, especially market price of the shares, which can fluctuate from day to day and from week to week. But these are the main factors that would affect the valuation in the longer term. Regarding gold price, we're going to have a look at three scenarios, with the balanced scenario plugging in the gold price of $1,900 per ounce. Conservative scenario includes the gold price of $1,600 per ounce, and the optimistic scenario plugs in the gold price of $2,200 per ounce. As I mentioned in many of my previous videos, I do expect gold prices much closer to $3,000 rather than $2,000, perhaps over the next couple of years. So perhaps even the optimistic scenario here is not outlandishly optimistic. Looking at the reserves and resources, including the ones in Russia, Kinross has gold proven and probable reserves of just over 32.6 million ounces, and measured and indicated resources of gold are just over 28.5 million ounces. For silver, the reserves are nearly 58 million ounces, and the M&I resources are just under 45.6 million ounces. Taking into account the current political situation, if you exclude the resources that are located in Russia, you will end up with gold reserves at 28.5 million ounces and gold M&I resources at nearly 26.8 million ounces. Silver reserves will come down to just under 42.9 million ounces, and M&I resources of silver will come down to just under 39.5 million ounces. The costs of extraction are not extremely high, at $1,130 of all-in sustaining costs per ounce of gold, and the long-term debt are over $1.6 billion. For taxes, I assume a flat tax rate of 20% all across the miners in order to simplify things and save some time. Looking at the per share value, we look at the number of shares outstanding, which is 1.3 billion shares for Kinross, and that includes 0.23%, less than a quarter of a percent, in insider hands. Greater percentage of insider shares is a very positive sign for the reasons of aligning the incentives and because the insiders would be more aware of what's actually happening to the company. Looking at discounted value, we're going to discount over the average mine life, which is 13 years for proven and probable reserves. That's based on expected annual production for 2022. And this reserve life is the same whether you include or exclude reserves in Russia, as excluding the reserves in Russia reduces both the reserves and annual production, leaving the average reserve life at 13 years. But including half of the measured and indicated resources brings the resource life to 18 years in case of total global resources, including the ones in Russia. But without Russian resources, the average resource life is around 19 years. That's due to lower annual expected production. Before we jump into the actual valuation numbers, some of the highlights that might affect the valuation but don't actually go into the model. Firstly, the cash balance is pretty healthy at above $500 million. Additionally, there is a very good exploration potential for Kinross, as well as some of the interesting upcoming drivers for a potentially higher share price. For example, the La Coipa mine in Chile recently restarted the production in March 2022, so increased annual gold production sometime later into this year might actually improve the valuation. As mentioned earlier, Kinross has recently acquired Great Bear Resources in Canada, and perhaps some of that amazing exploration success might actually continue. And the Manh Choh mine in US is expecting a feasibility study sometime by the end of 2022, which might also be an interesting driver for the share price. Additionally, this year Kinross is expecting $140 million in a share buyback, which is also likely to support the share price to some extent. Finally, moving on to the valuation, starting with a conservative valuation where we plug in the gold price of only $1,600 per ounce. And in this valuation, we only look at the value of reserves, proven and probable reserves in the ground, without taking into account any of the M&I resources, never mind inferred resources. In that case, the discounted per share value after costs, debts, and taxes is going to be around $6.33 for the global reserves, including Russia, and $5.41 without Russian reserves. For the balanced valuation, we're going to plug in the gold price of $1,900 per ounce, and still in the balanced valuation, we only look at the value of the reserves, without including any of the resources. And in that case, the discounted per share value after costs, debts, and taxes is $10.84 for the global reserves and only $9.33 for the reserves excluding Russia. And excitingly, for the optimistic valuation, we plug in the gold price of $2,200 per ounce. And in this valuation, we look at the proven and probable reserves, as well as only half of the measured and indicated resources, as those are a little bit less certain than the P&P reserves. But we still don't even include any of the inferred resources here, so even our optimistic scenario is again not outlandishly optimistic. And in this case, the discounted per share value after costs, debts, and taxes is $19.87 for global reserves and resources, and $17.45 excluding Russia. And lastly, perhaps, due to challenging jurisdiction, you might knock off, say, 20% off from each of these valuation scenarios. As historically, it seems that Kinross is lagging a little bit behind these valuation metrics, at least partly due to the challenging jurisdictions. So that's my view on Kinross, but of course, as nobody knows the future, I'm curious in your opinion. Share your opinion down in the comments below. Remember to hit that like button and subscribe to the channel. Have a nice day. Bye-bye.